What's up, guys? Let's see what price wants to do in this PM session. So, per usual, I have outlined the lunch buy side and the lunch sell side. So that's the high and low between 12 and 130 usually. It's kind of hard because I'm 130. It's this candle, but I'm gonna call it that. Now, let's go to the dollar. So, I outlined on, I believe it was the daily. This daily fair value gap for the dollar is the next sell side I want to see taken. We're pretty close to it. So as long as we continue to make lower lows, just know we're going for that. I think it's a pretty significant level. I mean, yikes. Look at that. That daily candle on the dollar is insane. So if we go and take that level of liquidity, I would expect the indices to also be going higher. So we can see NASDAQ is already above these highs, and what we have mapped out here in this blue is the rest of this CIBI and then this volume imbalance. So those are the next levels I'm looking at. It's kind of hard because there's not much in between this blue area to the left. It's just a big CIBI way over here, but that's fine. And for ES, we have these two highs, which are pretty far away. We'll see if price wants to do that today, though. Outline those. We just have to outline the levels. We'll let price worry how far away it really is. So for ES, did I not outline the sell side for ES? No, I didn't. So I know a lot of times we usually frame PM session under the guise of, if we take the buy side, we'll target the sell side. But with what today is, or how price has been today, this huge up close candle, again, we have to be very careful that we're not trying to pick a top. The price is spooling to the upside, the algorithm is spooling to the upside, so we need to make sure we try not to pick a top. Also with the dollar that close, and it's continuing to make lower lows, and with that dollar higher time frame level in reach, I'm going under the context that the dollar wants to go and reach into that. I kind of like where we are right now because see how price kind of presented that structure that I've been, I'm starting to see November has this characteristic of just delivering price like this in like random times. So I think like 12:30 to 1 is pretty random time, lunch macro, and it's gross, but when it does deliver price like this, it doesn't leave much of an inefficiency that it would want to drop back down into. As you can see, it dropped back down, kind of spent some time accumulating, and then went up higher. So I feel comfortable in the idea that if we start coming into two, if we start showing some strength to the upside, that there's not much of a reason in terms of inefficiency and liquidity to want to drop lower. I like the 5 minute, not much of inefficiency. We have these two down close candles. They're very intentional. They look like an order block. I think we're kind of treating them as one as we speak. On the 5 minute, you draw it out, look, come to mean threshold to the tick. Perfect, right there. Bam, mean threshold. Yeah, so came to mean threshold. We're treating it like an order block. So I like the way that looks. This is, what is this, ES? Yeah, so again, we don't have to, on a day like this, just remember the context. If you're gonna go up, you don't have to take the sell side. Just kind of understand the bigger picture of what price is doing today. You know, we opened with such this large run up. We traced over 11 into lunch. So just think of the bigger macro picture. I'm talking like 15 to possibly hourly, but on the 15, you know, it doesn't have to come back and take the sell side. These down close candles were the retracement leg for higher price. So I know that's hard because it's not like a logic like if this does that, but it's just, I guess that's what comes with reading price. Again, I think if we come down below this low right here, then I think if we close it below it, sell side, we're targeting sell side. The way we just kind of topped right here above this lunch high, I am liking the idea of targeting that sell side. Again, we'll have to see how these lows are treated. I'm gonna take a quick look at NASDAQ. As you can see, NASDAQ. So even think of it too on the higher time frame, like the 15 minute. I kind of broke down earlier in this morning's live stream where I drew this depiction where price, so this is a significant level, this blue fair value gap on the daily above this buy side high. It's that green line. Price tops in two ways. Only two ways, or reverses. It either forms two highs where the second one is higher and then goes lower, or it forms two highs where the second one isn't higher and goes lower. It can only really reverse in those two ways. So as we can see right here, I like the idea of shorts under the assumption that this is like our line in the sand, creating this second scenario of a top for this daily range. I want to see if this candle closes. Yeah, we got a close below these lows. I hope this price run doesn't happen before. It looks like it's probably going to happen before. So a little annoying, but thought, see the dollar here. This wouldn't be the worst fair value gap to enter in short on. Let's see what ES looks like. ES didn't break below those lows. So, you know, again, sometimes it can be a real blessing in disguise, the fact that we have to wait for two and not trade this, because let's see what ends up happening. Does it actually deliver to the sell side? According to our rules, if you're trading the silver bullet, we're not allowed to. We shouldn't be entering. But ES didn't break that low. See that? That's a SMT divergence right there. But they both did make this high. So let's see. if NASDAQ price came up and just completely disregarded this fair value gap, I would be very bullish, because I think that would completely confirm this SMT was just a sweep of liquidity, and we're going higher. Sorry, that 5-minute chart's been like that. And I would like that because I'm sure the dollar would be continuing in its downtrend in that context. Hopefully price kind of stays where it's at until 2, and we can try and find something. Notice on the 1 hour too, on the 1 hour, we had this hourly fair value gap that we came down, printed a down close candle, came up. So I like that for upside. I will say that this wick on the hourly, we did stop. This high is forming at a very convenient consequent encroachment of that wick. But if we saw the SMT with the disregard of this fair value gap and the dollar dropping, I wouldn't sweat that. I feel like lately when I switch assets to like my 5-minute and 15-minute chart, I think it's just because of the way how much we moved. I think it tries to auto fit the whole daily range, and I don't want that. Okay, so watching the dollar. Yeah, it tries to like fit that whole daily range, and it's annoying. Okay, let's watch what happens here. I also like this low because if this, so we have this significant low on the 5-minute, and then you have this run up, and I like this low as a retracement. Okay, I'm just short of 50%, but we have a short-term low high, so this is going to be an intermediate term low. And then you can probably consider this a long-term low of the day if we have 2 intermediate terms to the next of it. Nothing's popping off. Like this might have been an intermediate term. Well, let's see. I want to see it shoot through this fair value gap. What do we have? 10 minutes? 10 minutes until 2. Again, it's kind of a blessing where this fair value gap is in time, because I think by the time 2 hits, we're either going to be above it or respecting it. And I think that will be indicative of whether this high right here was a sweep of lunch side to go lower, or if it was a shift in market structure to go higher. More specifically on the 5-minute, this high right here is the shift in market structure. And then this is the intermediate term swing low to continue. So what we'll have to see on the 5-minute is, if this is an intermediate term swing low, we're going to have to see 2 short-term swing lows on the side of it. So I'll like to see on the 5-minute this, maybe a come up, and then around 2 o'clock we can find an entry at that next swing low to take it higher. And then if we do respect this to the downside, we got some room before we reach the lunch sell side. So I think by the time 2 o'clock hits, we will know the draw, and we can hopefully find a fair value gap to enter in on at that point. This is also a 5-minute or a 15-minute fair value gap. So again, if this is the high, this is the retracement low, and we want to go higher, it would make sense that we would respect this 15-minute fair value gap to the upside. As you can see, look at the bodies of these candles. They are hovering right on the consequent encroachment of this 15-minute. You can see on the 5-minute, the bodies can't even close within the middle portion. On the 5. But we're not really able to get above the consequent encroachment of this fair value gap. I would say downside, I'm just a little nervous about this SMT that's happening. Again, we could see downside, and by the time, say, we break this low, ES is also making new lows. But that's fine, because we will confirm the target of the lunch side. What I feel like, this almost looks like a 1-minute, a mini market maker sell model, with this being the original accumulation. We gotta come up here, first stage, second stage, come up, smart money reversal, call. You know, this, if you were looking at like the 30-second and the 15-second, I'm sure it could even paint a better story. So this would be right here. This would be the first stage distribution happening. And what happens is, you know, by the time 2 o'clock hits, hopefully under that assumption, we can catch the second stage redistribution somewhere around here and play that down to the sell side. I like that the dollar, look at the dollar, it's making this high. as long as we can get ES on board. I kind of like that little fractal. Again, we're just using that for context. Okay, so ES is taking that low. It looks like it's about to. I'm going to take this SMT off. I think the fact that price on the 1 minute delivered with no inefficiency at this buy side run means a lot. You know, there's not much of a turning point around here. I think this down close candle was that, and it did its job right here. So what we would actually want to look for is, you know, that to be kind of treated as an inversion order block when we're delivering the opposite side of the curve. I'd be more interested in coming up and tapping the bottom of this as an order block. Let's see. ES made these equal lows. I'm still okay with that. I am liking downside. Let's see. Yeah. I want to see the dollar continue to take this high. We have this fair value gap to pay attention to. This is all happening, remember, in this higher context. We're making these two highs. Okay, I'll just... watching ES. So this fair value gap that we just drew out on ES, it looks like ES is kind of tapped into it a little more. Equal lows. Again, so this is the first stage distribution. We'll be interested in some form of second stage. That's the way the timing looks like. Okay. Again, we gotta wait for 2. Gotta wait for 2 o'clock. So you can see right here, these up close candles kind of treating this. I like that the dollar looks like it's making a swing low here to go higher. ES is breaking down. Okay, we'll look for a sell. I like that. Got a big 5-minute SIBI fair value gap right here, so you know, we are pretty close to the bottom of that accumulation. This is the sell side we're targeting. Hey, you know, we might not get it. That's okay. Be proud that you listen to the rules. And I know it can be a little hard when, you know, I'm kind of here outlining like exactly what's going to happen. And there was other entries, you know, we could have taken. We could have, like, I kind of liked this up close candle right here, using this order block as an inversion. So this is order block on the buy side, using as an inversion on the sell side. I did like that, but we'll wait and see. I'm gonna take that off for now. Watching the dollar. ES also never delivered to that fair value gap. Let's be patient. Who knows? So this candle, this 2 o'clock candle. Let's see. This one's going to be hard so I would rather wait for this fair value gap up here, personally. You could enter there and it might deliver, but I'm going to wait for this one. What do we got for handles here? We got it there. Watching the dollar kind of make this high, low, high, low. ES also made an entry. Yeah, that would have been valid. I'm just going to kind of wait. I would have liked a little more of a retracement. But it looks like it's going to deliver. So hope you guys got that, if anyone did. I would definitely take something off right here, 100%. So we kind of did go lunch buy side to sell side. Wasn't expecting that, but here we are. Yeah, honestly, I probably should have entered that one right there with how many, if you notice, breakaway gaps we left. We left one right here. We left one right here. So it made sense that price was in a hurry to get this sell side. It's fine. Can't get them all. So we'll call that was the silver bullet. Happened pretty quickly, about 2 minutes in. And that's sell side right there. Yeah, so it's like a little mini market maker sell model right here with the original accumulation all the way up, smart money reversal, first stage distribution, and then a really small second stage. Terms of going lower, let's see. We have the top of this. I would use the top of the opening range gap as the next target to the downside. Dollar taking that high. ES also broke that low. I'm going to take a quick look at ES. Come on. I'd be interested in going short still, but I'm going to wait for a pullback. We might not get it, but I think on the 5-minute, we're going to have to make a lower high. So I'll wait for something of that sort. I would re-enter on this. I like that. I do think it could retrace a little more. We do have this 5-minute fair value gap, these two 5-minute fair value gaps. I think, oh, that's a bummer. I think it could get back up into this original silver bullet, to be honest. Let's see, I'm gonna take this off. Just kind of watch. Okay, we'll see. I do think it could go a little more though. So stop placement, we have, I'm gonna try and use 3 PD arrays on this one. I'm gonna use this fair value gap, this as an order block, and then this silver bullet right here. This fair value gap. You know, I am a little nervous about that entry just because of how deep of a discount I think we are in on the higher time frame. And I really liked that setup because it was just a pretty obvious market maker sell model. I'm going to be watching the dollar closely. I want to see it continue to make higher highs. I don't know. I actually kind of wish I didn't enter that. Let's see how we treat this fair value gap. If we close above it, I'll probably exit and then see if price wants to, we could come up, retrace higher, and then after getting more data, I'll see, do I want to go short, or actually is it kind of in reversal territory? Because again, remember, all this price was all based off of the market maker sell model. So now that we got below this accumulation right here, we have to kind of sit back and wait. And I think I jumped into that trade a little earlier than I should have. Again, we could continue lower, but look at where we are in the higher time frame. This is, I don't know if I'd call it a discount, but we are, let me focus on this. If we close above this fair value gap, yeah, so I'm going to exit that for a second. Again, because for that theory to work, we're going to have to have such a big stop. And I was thinking about it a little more, and I just didn't like really where we were on the higher time frame. Like, I thought, yeah, I didn't like where we were, and this whole price leg was based around this market maker buy model, which we finished that trade idea. So again, look at the dollar kind of turning around. Again, this could just turn around and go exactly how I had planned it to, but that risk, I don't really want to take on that risk. Let's see. Look at it. Yes. Yeah, it could be going our way. I'm a little torn right now, so I'm just going to wait. And notice how this 15-minute body didn't close that heavy. It just wicked. Again, we could spend the next like 5 minutes kind of in between these two fair value gaps and then send it lower. I really wish, well, this was the entry right there, because this sell side was just so obviously the draw. But now that we took that sell side again, we have to reassess, because we can't just keep picking the next like lower as the next draw. And look at the dollar. It's kind of interesting spot. This was the trade though. Right there, that entry. Again, I don't think closing to the top of this fair value gap is super bad right now, just because I think we have, this order block right here, so it could be like digging into that, and we have this fair value gap, so I could see it even just entering up into there for more of a discount to go lower. But when I entered at the bottom of this, it was a little hasty, but part of me was also just thinking, okay, well, I'll enter it for a quick reaction, but if I don't get it, then I'm going to reassess. I'd be curious to see how we treat this one. can see us on the 5 minute, this 5 minute fair value gap. We came up, touched the consequent encroachment nicely with the top of that candle. But the dollar in the background, that yellow line, seems to be going down a little bit. Again, the fact that this candle stopped so perfectly at the 5 minute, and it was a 5 minute candle, stopped at the 5 minute consequent encroachment, is good for the downside narrative. But I'm just going to wait. And another thing too, if you notice how quickly this price leg happened. This price leg happened so quickly because the draw was so obvious. And now that we've taken that draw, that's one of the reasons why I exited that trade as well, because I kind of saw this static coming and I didn't want to sit through it, because say it hit my stop, it would have just been really emotionally draining, and it would have been hard to take. It would have been a bigger loss and just like harder to emotionally hop into a second trade. Whereas if I just exited for that small loss, I feel like I would have a little more mental stamina to then enter a second trade off of more data, smaller loss. It looks like it wants to go down, but any re-entry would have to be in here, and I just want to see how it treats that area. And I want to see what the dollar does. Dollar's dropping. And then remember what I said about the 3 PD arrays? We would have had to have such a high stop. If we close above this and then use it as an inversion with the dollar dropping, I'd feel like we might go up. And you could still go short too. Like, nah. Wait and see. You can see we're entering into this 15-minute SIBI. But on the 5-minute, we just moved so much on the 5-minute. This could easily be like on the 5-minute chart and the 15-minute chart. A lower high to go lower. But it came so far already on the day. Let's see how we treat this. The dollar's dropping. think we're going back up. Part of me was just kind of a little nervous that this could be, so from this swing high to this swing low, this would be a retracement into a discount to send it lower. But with how heavy the dollar looks, I think we're going up. Let's look at ES. That's the Dow. Yeah, ES is just straight back up. It's actually, I kind of like what ES is doing. I like the fact that I like the idea of it getting above this swing high. Gonna delete that for a second. Could also, if we get above this swing high, you can use it as a 5-minute breaker. Yeah, you can see the bodies on ES. The bodies of these candles didn't even close below the bodies of those ones. I like longs. Let's see. I'd enter on the next fair value gap long. Dollar making a new low. It's going for that higher time frame low we talked about. I'm watching to see, so when this candle printed above this candle, this one became an order block. Mean threshold, you can see them coming down and touching the top of it. I want to see, the 2 points I'm looking at is this mean threshold and this swing high. Do we go above this swing high and close above it and then continue? Or do we come down below and close below this mean threshold? I would like a 5-minute entry. I'd like my entry to kind of go with a 5-minute. So what I could see is, just wait. I'm going to look at the dollar action real quick, because I think it dropped low enough to get into that zone. No, it didn't. But okay, we're targeting that. So when this candle finishes, we'll be printing a new 5-minute candle, and I want to see if it comes down. It might not though, because this was pretty efficiently delivered, sell side then buy side. So if the 5-minute went up and closed above this high, we'd have a breaker on the 5-minute, and I think that would be a pretty good entry. And this is just such a significant high in the 5-minute. It looks like we're going to take it, but it's also a 15-minute high. Trying to find a fair value gap for us to enter in on. It's interesting because on NASDAQ, that's not NASDAQ. On NASDAQ, we're not as close to that high. Okay, come on. Let's get a good close. Nice strong close. I think we went to it by the tick. I want to close above this high. I want to close. If it doesn't close, I'm just going to wait. Waiting for a fair value gap. I think the buy side is the high of the day. It's not giving us much in terms of fair value gap entries. That D's okay. Gonna be patient. I really want confirmation that it is going higher. The fact that we came down, took the sell side after taking the lunch buy side, and the fact that NQ hasn't taken that high yet. See, on the 5-minute, NQ hasn't taken that high. Makes me a little weary that ES is just kind of cleaning up both sides, and then they're going to retrace into the middle of this range to close out the session. Just want to make sure that isn't the case. I think a 5-minute close above that high would help me feel a little more confident. We got 30 seconds left on this candle, so that'll close out the 5 minute. And we'll see. Okay. Looking for a fair value gap entry. Damn, are we really going to get no fair value gap to enter in on? Got to get at least one. Oh, we barely got any room to that buy side. Okay, well, hopefully we can get an entry right here. Okay. One in at market. Based off of that. Stop. Gonna put it there. Dollar very close to its objective, that sell side. I like how these two bodies respect to consequent encroachment. I think it might be a rough delivery there. I'm kind of expecting that. I really want that candle to close above these highs. Yeah, like I said, I think the delivery is going to be sloppy. I'm kind of wondering if we should expect that into the end of the year. Um, like I wouldn't be surprised if it came down and touched this fair value gap before sending it higher. Remember, we also have this breaker on the 5 minute. Um, I wouldn't really like it to get below this fair value gap, but I'm just going to be patient just because like the last couple trades, um, when the draw on liquidity was really obvious, I kind of rushed my stop up because it was such a sloppy high resistance liquidity run, and we ended up getting stopped out at a point when like if we just kept our original stop, it would have been fine. So I'm just gonna try and stay true to that right now. So we have one PD array, this order block, the bottom of it, PD array. Just because I'd rather get stopped out right now and like be wrong, like it never got to that liquidity, than like the last few days I had the draw on liquidity correct, and I just kind of stumbled with the trade management, and that's what really ticked me off, because like the analyst had it so right. The dollar's still dropping, so I'm not too worried about it just yet. I don't really like this, the way these candles are printing right there, though. And I don't like the time we're coming into. I don't really like trading in 3. But as long as the dollar's going down, yes, kind of. Yeah, watching this, I want these two down close candles to really hold price off. Yeah, even ES never really had an entry from this swing low after that run up. NASDAQ kind of did. It was like those inversions that we had called out, but I didn't really. I was a little too focused on the downside. Dollar's still going down. Come on. I'm wondering if it's going to wait until this 3:15 time. Okay, I like how it closed above these highs. I want to see it continue. I'm going to move this right there. What are we at? It is a little dangerous having it not right at that high because, again, we could just wick over that high, but I'm going to watch it pretty closely and see how we take it. Sometimes it'll just blow right through. Sometimes if it wants to wick, it can wick over it and then turn around. I've seen it, we might wick over it a little bit, come back down into a PD array and then blow through it. Come on. Okay. That was an emotional roller coaster. Cool. So we walked away on the day green. Small green, 'cause we took that small loss. But again, I'll just keep reiterating. I am expecting Wednesday, Thursday, Friday to be the best price in terms of price action. So I think the goal today was just walking away with anything green was good. In terms of NASDAQ. Yeah, looking back, I am pretty happy that I'm really happy we exited that trade. I don't know what it was. It was really what got me out of it was I didn't initially think we were gonna actually reverse like we did, but it was I thought the probabilities really dropped when we finally took this sell side. so we took the sell side, and I think, while we were up here and when we broke this low, I was like, okay, like we're definitely taking that sell side because we took lunch. And then we waited for the 2 o'clock hour, and this was the entry. So I think this was, I don't know if this entry was, I think it was on ES. So I thought this was a pretty nice silver bullet. But if you notice, after this, and we delivered to the sell side, we came up and peaked above this and used this as an inversion. But I didn't think that was too obvious at the time, because I thought if price did want to retrace and go lower, a pullback up into even this or fair value gap would have been enough to constitute like a retracement to go lower. And I didn't like how high that was in relation to our entry. So that's why when we peaked above this fair value gap and I was like, okay, it's not just going to enter it and go lower, I exited the trade because I said we could retrace up to here before our narrative, before our idea is invalid, and I don't want to take on that much heat. I'd rather exit and possibly re-enter. But then what I thought was the biggest red flag was the fact that we finished this trade narrative, this market maker sell model. So when we got below that and then we peaked up above this fair value gap, and then I was looking at the higher time frame structure, and you know what, my big mistake was not looking at this 15-minute and paying attention to really where the 15-minute candle closed. You can see these two 15-minute candles, the bodies of them, we wicked below. Remember, the wicks do the damage, so the bodies didn't close, and that should have really been the sign that we're not going lower. And I should have caught that a little earlier. But yeah, so we exited that trade, and thank God we did, because we were almost offsides. And then we never had an entry. You never really had a silver bullet entry. Somebody could argue that like you could use an inversion, but I want to keep it a little more straightforward than that. So after this, we never had a fair value. Well, we didn't have much of a fair value gap to enter on up until this entry that we took. So it wasn't the worst. It wasn't the best, but we walked away green. That's a win. September the price has been kind of sloppy, but we went 5 for 5 last week, and now we had a red day yesterday, had a green day today. I'm excited to start using more than one contract soon. Once we get this, I know it's been a long battle back to break even, but once we get it back to break even and we start using more than one contract, scenarios like this, it'll be a lot easier to have our green days be way bigger than our red days, because we'll leave a runner on for things like this. And it's kind of hard. It is hard, but I think it's good because it shows, it's a way for you to prove to yourself whether you can actually trade. Because as you can see, I think the other day we had this 280 loss, and I got a little emotional, I feel like, in those trades. Like I took 4 trades that day. The max limit is supposed to be 3. But that's not a huge loss. But when you think about like right now, all of our winning trades are 250 because we're sticking to that one contract rule while we're in drawdown. But once we get out of drawdown and we start using more than one contract, those 250 days could go easily from 250 to 750, because what's going to happen is we're going to take the first 5 handles off, and then we're going to map out, the next draws on liquidity. So we might get first 5 handles, and then we'll wait and see if it runs another 5 handles, and then that second contract will go 10 handles, so it'll be 250 plus 500. And you really should wait until you get out of your drawdown, because you need to prove that you can consistently get back out of that drawdown with consistency over leverage. that's just my opinion. I think you don't have to prove that, but if you can get out of drawdown without over like using multiple contracts, then your win rate is high enough where you deserve to add on multiple contracts. Yeah, so that's a little monologue right there. But so in the case of this, if we use two contracts, the second one we'd be holding on to right there. And again, it'll just be like that's what's going to really take this account curve from kind of just, looking sideways on the big picture to really steepening that curve. Yes, I'm excited for Wednesday, Thursday, Friday. And I hope days like this can be just like a little more relatable. Prioritizing walking away green on the day than anything else. Two trades, because the price action today it wasn't super difficult. It just wasn't the most obvious. So walking away green, I think, is a win. And yeah. Well, and where I think this can go for upside, neat little trick. I forget what video ICT showed this in. He talked about double tops and double bottoms, and if you have a double top or a double bottom like this, what you do is you measure out the high to the low, and then you take that zone. Give me a second. I feel like my trading view is not working. There we go. You take that zone and you double it. So top end of this could be a pretty good exit point for a runner. Let's see where the dollar's at. Still haven't even hit that, so I do think that the top of this zone could be very well in play. Possibly, I'm guessing for the next hour, what we'll do is we'll just kind of push our way up there. Yeah. So I will be trying to work on saying and so less as well. And I am excited for when we start using multiple contracts. I'm excited. I think, the account curve will start steepening a lot. I think the YouTube channel will get a little more exciting because we'll be leaving runners on. And I think the period we're in right now of just getting this account out of drawdown will serve as a good look back. And what that really is, when you double, I think something that ICT has been doing a lot more recently, when you double that double bottom, what you're really doing is you're just getting one standard deviation off that swing low. Then you can kind of measure out more. And this would be like a really good, so in the example of where we are in price right now on the higher time frame, it's kind of hard to pick out levels to the upside because the 4 hours kind of hard to see. But on the daily, I mean, look what's in between where the price is now and this next high up here on the daily. This is the target going into the rest of the week and next week. But in between where we are now and there's not how, if you're trying to figure out how to map out levels, It can even be kind of hard on the 4 hour. Like we have this 4 hour fair value gap. This standard deviation thing is probably your best bet. So enjoy the rest of your day, guys. I am logging off. Oh, the zone I marked out on Dixie. Sorry, I usually don't look at the comments until I try not to look at the comments. The zone I marked out on Dixie is a daily fair value gap. So if you watch the weekly forecast video I made on Sunday, it's in this channel. If I think you have to be like a returning viewer to watch it, a different video what pops up if it's your first time looking at the channel. But when we were right around here, I was expecting us to use this as an order a bearish order block to the downside. I wasn't really expecting this much like velocity off of that order block, but we got it. And this orange area is this daily fair value gap. So what I did earlier today is I mapped out the sell sides on the daily, and then we had this sell side, we took it, and then I mapped out next this inefficiency, because remember, price moves for liquidity and inefficiency. So when we are seeking sell side, we map out the liquidity, which is the swing low, and the next inefficiency. If you go on the 4 hour, I put the sell side line here. It's really just the top of this zone, but I put that because we got these little swing lows right here on the 4 hour. So that is what that big area was. The next level, so I think going into tomorrow and the rest of the week, we want to see how we treat this daily fair value gap. Do we show any sensitivity to, because we've come a long distance, so we could just kind of retrace a little for the end of the week. We don't know what we're going to do, but we want to see how it treats this. Does it come down to consequent encroachment and turn around? Does it close below consequent encroachment and seem like it wants to go lower? If we close on the other side of this daily fair value gap, I'd expect to see it used as a inversion. And then we have this sell side down here. Probably going to delete that. I'd watch this wick too. If we get below, I'd probably pay attention to the consequent encroachment of that wick. Okay, well, it doesn't want to show up. I'd pay attention to the consequent encroachment of that wick. And yeah, but let's wait. We have a whole fair value gap to get through. NASDAQ, this blue area is on the daily. It is a fair value gap. As you can see right here, I chose this as the bottom of it because you can see this fair value gap is a SIBI. So when we came up with these wicks, we did deliver a piece of buy side just on the delivery up. So you can see here we delivered a little bit of buy side into that wick and dropped. And then when we came back around to this SIBI, notice how this candle or this wick goes above this, because now this is the area where it's inefficient. And then when we delivered that right here, that became the level that was left for inefficient delivery. So that's what I had mapped out for that blue area. I have this volume imbalance noted. We've come pretty far on the weekly, but I am expecting these highs to be taken. Yes, if you want more info on what I'm expecting more longer term, I have I have a playlist on the YouTube that's longer term projections, and I do a video about what I'm expecting ES and NASDAQ to do. But that was buy side. Cool. See us retracing into this fair value gap. I like this fair value. I usually like it when fair value gaps. So when a fair value gap forms and it breaks through a significant high, I do like to see it used as a level for retracement. So you can see it on the 5 minute it happened. It even happened on the 1 minute. If we close below this fair value gap, I think we could go a little bit lower. Okay, now I'm actually logging off. Enjoy the rest of your day.